Wow, what a roller coaster ride on the Nasdaq for the last few days. The Jackson Hole's meeting going on, or the Federal Reserve, that has added the catalyst for all these kind of upheavals, I would call that. Well, initially the market was actually moving some of the tech stocks, especially the Magnificent Seven, with the expectation that Nvidia will have a solid result. And when the result came, there was a new high of 503, and that's the 1-year high now, 52-week high. In the after hours, it was pretty much 518, by the way. Well, hello everybody, and once again welcome to Synanomics, the money machine. By now you have understood I'm going to talk about Nvidia today. Yes, Nvidia posted a fantastic result, the Q2 earnings report, and now the market cap is sitting at around $1.14 trillion. As I mentioned already, the 52-week range or the 1-year range is pretty much 108 to 503. Yes, you heard that right. There has been 5x fluctuation in 1 year's time. Well, let's analyze the results, and then we'll talk about a little bit about the guideline Nvidia has given, and also what the analyst and the Wall Street thinks about it now. So Q2 revenue was record-breaking $13.51 billion, and that was up 88% quarter over quarter and 101% higher year over year. And this actually happened because of the record data center revenue of $10.32 billion, and that was 141% increase sequentially quarter over quarter and 171% increase year over year. The GAAP gross margin was pretty much 70%, and the non-GAAP was almost 72%. The GAAP net income $6.2 billion, and the non-GAAP net income was $6.7 billion. From the earning per share perspective, the earning per share was $2.70 as compared to $2.07 kind of expectation, and that was 429% growth year over year and 148% growth sequentially quarter over quarter. That was fantastic. And when you talk about the free cash flow, which always I talk about, that free cash flow was almost $6 billion, and that was 3 times last year's free cash flow of Q2. That was $2 billion. As of today, the cash in the books are pretty much $5.9 billion, roughly $6 billion cash. And it's pretty much twice the cash it had last year. That was $3 billion. Again, Nvidia's third quarter outlook has been fantastic, and it has beaten the market expectation. So Nvidia is forecasting or giving a guidance of Q3 revenue of $16 billion plus minus 2%. From the GAAP and non-GAAP gross margin perspective, is pretty much 71.5 to 72.5% plus minus 50 basis points. So he's forecasting a fantastic Q3 as well. And guys, the most important part was that in Q2, the company returned the shareholders with $3.4 billion worth of share buyback on top of the dividends. And despite that much of buyback, the company is left with $4 billion from the buyback fund, and they're going to add $25 billion. So in Q3, they want to buy back shares worth $29 billion. So from all angles, when we look at it, it's fantastic result. Record breaking, and if you really look at that, last year it was $6.7 billion, and this year is 13.51. I think many of the analysts have told that they have not seen this kind of result for a long time, last 20-25 years. Well, we'll talk a little bit about its specific businesses. So let's start with the data center. With the data center, the revenue was $10.32 billion. That was up 141% quarter over quarter and 171% year over year. It actually announced Nvidia GH200 Grace Hopper, super chip for complex AI and HPC workload. Also announced plenty of them others. I will not cover all of them. I will actually include the whole statement, the whole press release in the description section. But just to highlight a few of them, it has announced quite a bit of new chips basically. Nvidia L40 GPU is a universal data center processor designed to accelerate the most intensive applications for the compute. Similarly, it announced Nvidia Spectrum X, an accelerated networking platform designed to improve the performance and efficiency of Ethernet-based AI clouds. And now Nvidia RTX workstation with up to 4 new Nvidia RTX 6000 ADA GPUs, as well as Nvidia AI Enterprise and Nvidia Omniverse enterprise software expected to ship this quarter. On top of that, it also announced kind of its partnership with many of the companies. Just to name a few: Amazon Web Services, Microsoft Azure, and regional cloud service providers. They're all actually going to leverage or use the general availability of this cloud instance based on the Nvidia H100 Tensor Core GPU. On top of that, actually Nvidia also partnered with a range of companies on the AI initiatives, and those include ServiceNow, Accenture, VMware, Snowflake, SoftBank, and Hugging Face. Well, it has also announced actually the AI Workbench, an easy-to-use toolkit allowing the developers to quickly create, test, and customize the pre-trained generative AI models on a PC or workstation. That is very important, guys. So now Nvidia is not only looking at large data centers, it's also kind of getting into the PC and workstation space. And that's where Enrique, who's the HP Inc. CEO, had been talking about. So well, a lot of new development that has happened, and actually that's what they are also thinking. The analysts' expectation is that out of 16 billion revenue for Q3, pretty much 70% of that will be data center revenue. If you look at the other businesses, for example, gaming, and we all know that it has been a leading company for gaming. Gaming revenue was $2.49 billion. That is 11% up quarter over quarter and 22% higher from the year over year perspective. Again, in the gaming space, they have started shipping the GeForce RTX 4060 family of the GPUs, bringing it to the gamers of Nvidia Ada Lovelace architecture. Well, it also announced the Nvidia Avatar Cloud Engine. In short, it's called ACE for the games, a custom AI model foundry services using AI-powered natural language interactions to transform the game by bringing intelligence to the non-playable characters. Yes, plenty of exciting things happening in the gaming space as well, guys. In the professional visualization space, the revenue was 379 million. Of course, this is a pretty small business when you compare with the overall $13.51 billion business. This is just $379 million. Having said that, it also grew 28% quarter over quarter, and it actually declined 24% from the yearly basis. That said, Nvidia actually announced 3 new desktop workstation RTX GPUs based on the Ada Lovelace architecture: Nvidia RTX 5000, RTX 4500, and RTX 4000 to deliver the latest AI graphics and the real-time rendering. So it's basically touching pretty much all the form factors of the computer. And last but not the least, actually in the automotive sector, again, as I mentioned, these two sectors are segments are very small from Nvidia's perspective. Automotive revenue was 253 million, and that has gone down 15% quarter over quarter, but actually it was up 15% year over year. It did announce Nvidia Drive Orin, and that's powering the new Xpeng 6 G6 Coupe SUV's intelligent advanced driver assistance system. It also partnered with the MediaTek, which will develop the mainstream automotive system on the chips for global OEMs. Pretty much it will integrate the new Nvidia GPU chipset or chiplet IP to the AI and the graphics. So it is working with the automotive, and if some of you have watched Tesla's earnings report, Elon Musk was talking about that if they get the right GPUs, they can actually accelerate some of the self-driving software, etc. Well, from any angle, if you look at it, it's doing extremely well. It has a record-breaking, it has surprised the market, guys. And even if you look at from the Q3 perspective, it's way ahead of the market expectation. If I'm not wrong, from my memory, the market was expecting that in Q3 they will be pretty much around 11.5 billion. Now they have come back with 16 billion guidance. Well, if you really look at the overall share performance, then Nvidia shares are now up a whopping 315% since the last October. Since the last October, guys. And as I told you earlier, for the whole year, 1 year, 52 weeks, it's pretty much 500%. So when we compare that, since the last October till today, no other S&P 500 company has gained more than 128% over that stretch. And Nvidia has delivered 315% return. Still, other stocks directly or partially exposed to the artificial intelligence AI have far outperformed the broader market this year. We all know that, and I have been talking about it in all my previous videos. Let's take some examples. Let's look at them. Meta, for an example, 142%. Tesla up 92%. Palo Alto Networks up 72%. Advanced Micro Devices, AMD, up 67%. Amazon up 61%. Salesforce up 58%. Adobe up 56%. And Arista Networks up 53%. And all of them are among the S&P's top 20 performers in 2023. So Nvidia is the leader from the return perspective in the S&P 500 space. Well, guys, if you look at the price earning ratio perspective, there has been a lot of noise around that. But look at the growth the company is giving, the earnings growth, 400, 500 percent growth in the earning per share. So if you really look at it from the end of 2024 or 2025 earning perspective, the price earning ratio is looking way too cheaper, guys. Yes, from 2025 perspective, the price earning ratio, the forward looking is roughly 31, 32. And look at the growth trajectory. And looks like this is going to continue for some time because Nvidia has a huge backlog and the demand is fabulous. Enormous demand they have, which Jensen Huang did talk about it. So if you look from that perspective, the company who is growing 50-60%, and if you look at just the data center growth, this quarter the data center was 10.32 billion. Next year, for the whole financial year, there is expectation that data center alone will be $60 billion revenue. So for the business which is growing at such a huge pace, 50 to 60% growth, and I'm telling a little bit in a conservative way, 31 price earning ratio on the forward earning doesn't look very expensive. And just to put things in perspective, guys, let's look at Apple now. Apple, after dropping a little bit, is trading very much on 27, 28 price earning ratio. And guess what? Apple is growing at 6 to 8% year over year. So it's, as compared to Apple, the price earning ratio of 31 for Nvidia is not looking that expensive. Yes, you heard that right. Despite the stupendous spike in the price, which I have covered that, many of the analysts think that Nvidia still has further room to grow, including myself. I also feel that it has further room to grow. And analysts' average price target on Nvidia is $538. Yes, you heard that right. It's $538 is the price target, tracked by the fact set. And that implies another 15-16% increase, basically. If you look at from the last night's close, 461, it's even higher. Well, Rosenblatt analyst Hans Mosselmann has given a target of $800, and that's the highest target on the Wall Street for Nvidia. Not only that, he also wrote about Nvidia that Nvidia stands in the league of its own when it comes to software and AI solutions. His rating pegs Nvidia's proper valuation at $2 trillion. Yes, you heard that right, guys. The proper valuation is $2 trillion, which would make it the fourth largest company in the world after Apple, Microsoft, and Saudi Aramco. Well, if you have not bought Nvidia and you are in the other side of the fence who think that AI is a hype, Nvidia's share price is too high, my advice, personal advice, you should think twice. You should think about it. Are you not missing the race? Nvidia is clearly the leader or the hero of the AI gold rush. Think about that. Having said that, these are my personal opinion, and don't forget to consult your financial advisor before making any investment decisions. If you like this kind of content, don't forget to like, share, and subscribe. Remember, Sinhanomics is out there to create financial awareness so that you can understand the companies you want to invest in, analyze them, and make money. With that, it's a goodbye from your finance coach, Pankaj Sinha. Bye-bye.